Hey everybody, welcome back. Today we're going to do a very cool walk around all the markets in Mercer County by price point and show you exactly what is going on so you can cut through the noise in the market. Stay tuned for today's episode of the Wilton Report. Hey everybody, welcome back to the Wilton Report. Today's episode is going to be really cool. We're going to do a quick walk around by price point in the county. Really start deciphering what's going on in the market. There's a lot of noise out there, so stay tuned. It's going to be a great episode. If you haven't already, please subscribe. It helps the program reach new ears and faces. So again, hit the subscribe button. And again, please feel free to share it with anybody you know that might be buying or selling in Mercer County or Greater Princeton. So before we get going, just as a reminder, the last one was really successful. We had a seller seminar. It's really focused on sellers. I was at a customer's house this morning. The landscaper's there. The photographer was there. The stager was there. We were getting this house ready to sell. I'm going to do a case study of a house we brought to the market about a month ago, 10 offers. And I'm going to compare it against the seller who did not go with us, put it on the market, and had to withdraw it. Ended up not selling it. So it's going to be a great episode. Stay tuned for that. So the seller seminar, December 18th, breakfast here at the office. Just text me at 609-773-8054. It's going to be catered by PJ's Pancake House. And again, it's just really informational. It's myself, a professional mover, declutterer, the whole shebang, and a stager, Allison Fernandez. So it's going to be a great meeting. So today we're going to kind of go back in time a little bit, and we're going to talk about a concept or a number in the real estate markets known as absorption rate. The absorption rate is an indicator of the pace of sales. And if you read about real estate, right? So this morning, this is a true story. I was in a Pilates class, right? And she said, the instructor said, look, a lot of people have a lot of different addictions. Mine is looking at real estate in Princeton. She lives in Princeton. It was a pretty funny statement. Real estate is the biggest consumer sport in the world. So one of the numbers you need to know and be able to kind of look at what's happening in the market is absorption rate. And again, when you know the math, you know the market. It's really important to understand that. So what's absorption rate? It's an indicator of pace of sales. Not that hard to calculate. I'm going to show you how to do that in a minute. Anything under 6 months, right, is a seller's market. It means the sellers have the upper hand overall in the negotiations. Anything above 6 months is a buyer's market, meaning the buyers are going to have more leverage than negotiation. So we're going to give you town by town example of that. So, there's a lot happening. I did a pricing analysis for a friend of mine for a 55 plus community in Mercer County. And I said, look, there's 6 or 7 on, nothing went under contract in the last 30 days. You want to get rid of this sooner rather than later. I think home prices in that particular segment are coming down. And you can almost calculate it based on the absorption rate, amongst other things. So let's take a look at Hamilton. So Hamilton's super interesting. It is a big municipality. There's over 100 homes for sale in Hamilton. And it's very diverse. It has now upper end. It's got starter homes. It's got everything. So this is Hamilton single family homes. So 0 to 300, there's 3 active homes in Hamilton, 0 to 300. Only one went contingent in the last 30 days, active with contract in the last 30 days. That's a 3-month absorption rate. When you jump to the 300 to 500 range, there's 48 homes for sale. 23 went contingent in the last 30 days for a 2-month absorption rate. So far, we are solidly in seller's market, right? At least on the surface paper. 500, 700,000, there's 26 homes for sale. Only 6 went pending. So you start to see that shift as you go up in price. The higher the price, generally speaking, in a normal market, the higher the absorption rate, because more people can afford a starter home between 0 and 500 than 500 plus. It's just, there's more people that can afford that segment. So that being said, the 26 and 6 still tilts a little bit towards sellers. Again, it's neighborhood by neighborhood. The high schools matter in Hamilton, so Steiner tends to sell better than the 9 Steiner district, right? And then when you get to 700 plus, there's 10 active, which again, you never would have told me 10 houses in Hamilton would be over 700,000. There are 3 went pending the last 30 days for a 3.3 month absorption rate. So what does that mean? It means the 500 to 700 plus market is teetering on the edge of becoming normalized. 6 months, 5 to 6 months, 8 months of absorption. So what does that mean? Depending on the street, depending on the neighborhood, depend, buyers are going to have a chance to have a say in the negotiation. Instead of competing with 10 offers, maybe there's only 2, maybe there's only 1, right? And then the buyer has to have a sound mind and sound bid strategy to make that offer, which usually they don't. They like bidding wars, but I've said that before. So interestingly, the Hamilton 55 plus market. So we're going to start breaking this down a little bit. There's 13 homes for sale in Hamilton in the 55 plus, meaning you have to be 55 or older to live there, okay? There's 13 active, 3 went contingent and active with contract in the last 30 days for a 4.33 month absorption rate. So the 0 to 400, interestingly, there's 3 active, 0 went pending in the last 30 days for what we would call an infinite absorption rate. There wasn't any demand in the last 30 days. So that's a market segment to watch. We'll keep an eye on it. 400 to 600, there's 4 active, 2 went contingent, right, for a 2-month absorption rate. But when you look at the 600 plus price point in Hamilton, there's 6 active, only 1 went contingent. Now, you can surmise that in the spring, we're going to see more inventory. As a matter of fact, I've already decided what our next episode is going to be. I'm going to do a town-by-town analysis of the number of sellers that decided to take their house off the market for the holidays, and then we already know what's coming back in the market, plus the traditional market for the spring. So there's 6 active, 1 went pending. That's a 6-month absorption rate. So again, the 600 plus market in Hamilton is teetering towards a buyer's market. Does that mean home prices are falling? No. But that means that sellers who priced in continued appreciation, so let's just say the average price for that price segment was 600. They put it on the market at 650, thinking market's going up. And I had a customer ask me that, should I price above the last sale? And I said, no, because this is the data you're looking at, right? So you have to bring it back down to the market price. So if the market's at 600,000 and you price it at 650 and you lower it to 600,000 and it sells, prices are not coming down. But it means the market will probably stop appreciating in that segment, and you may see some price reductions below that. We'll see. The 55 plus market tends to react severely to market changes. West Windsor. So West Windsor, hot market. And here, this is the funny part. And this is where you really have to know local knowledge, right? It's really important. There's 43 active homes for sale in West Windsor. 7 went contingent in the last 30 days. That's a 6.14 month absorption rate. So I'm a buyer. I'm thinking, my gosh, this is great. It's teetering towards a buyer's market. Okay. Except if you're looking for a single family. And I did not break this down particularly by price point. I just wanted to show you how you have to look at the market. So single family, there's only 12 single families for sale in West Windsor. 5 went contingent in the last 30 days. It's a 2.4 month absorption rate. That is a severe seller's market. And again, we can break this down by price point, et cetera. But the townhouse market in West Windsor, because again, a lot of new construction, a lot of people for it, a lot of people against it. We keep talking about that. I got in a Facebook fight with someone the other day. I should apologize about being a NIMBY. There's 31 active listings in the townhouse segment in West Windsor. 1 went contingent in the last 30 days. So if you're a buyer, go make some offers. Go make 10 offers. Offer on 10 different houses. Negotiate, right? Hire me as your agent. I will show you where I think these will end up. If they're new construction, we'll negotiate with the builders to get you the best deal, a rate buy down, right? Upgraded appliances, depending what package is already, like there's a million ways to negotiate these deals. So again, 31 and 1, that's a 31-month absorption rate. And I'm not saying the builders are desperate, but what I'm saying is you have room to negotiate in that segment in West Windsor today, unlike any time in the last, since 2019, right? In the condo market, which is a unit, right? You walk up and it's a single floor. There's 0 active. 1 went contingent in the last 30 days. That's negative inventory. So what does that mean? That's a severe seller's market. So just something to think about, something to watch. It's kind of cool when you start breaking the market down by price point and style, etc. Lawrenceville, again, traditionally a lot of inventory in Lawrenceville, not really seeing it, at least not yet. The entire market, condo, single family, 55 plus, 51 homes for sale in Lawrenceville, 16 went contingent in the last 30 days. That's a 3.1 month absorption rate. Seller's market, right? Single families, there's 27, which is not a lot, but it is the holiday time. 11 went contingent in the last 30 days for a 2.4 month absorption rate. Under 600,000 single families, it's a 1.5 month absorption rate. Why? Because that's the segment that the most people can afford. I'm downsizing out of my big house. Downsizing. I'm not buying a bigger house. I'm buying a smaller house. I'm a first-time home buyer. I'm not buying a 1.5 house normally, right? We do see it, but it's not normal. So that segment of the market will be busier than the million-plus market in Hamilton, and it's evidenced by the numbers. Then you go 600 to 950 in Lawrenceville, 10 active, 4 contingent in the last 30 days for a 2.5 month absorption rate. So it's very healthy, tilted towards sellers is what it is. But when you get into the 950, it's 8 and 1 for an 8-month absorption rate. So again, this doesn't mean the sky's falling, but what you then do is you look at those 8 very carefully: lot size, neighborhood, proximity to Princeton, proximity to transportation, conforming lot, non-conforming lot, all those different things. And you see, is it overpriced? Should I make a deal? Should we go? So when you start to look at it, you see, okay, if I'm a buyer in 950 in Lawrenceville, I can negotiate. Right? We have a customer who was on a home inspection yesterday, I think. Got a great deal in Lawrenceville. Nobody else wanted to buy it. They didn't understand the math of the house. He's going to move in, close, have instant equity. Great deal on that house. Hopewell. So again, Hopewell, super interesting. And again, I could do an analysis on Hopewell versus septic versus non-septic. Almost willing to bet you $1, and I don't like to bet, that the non-septic homes, the public sewer homes, will sell at a higher percentage than the septic. Why? One less thing to deal with, really, right? So the total market in Hopewell, which is, again, a huge municipality, is only 46 homes for sale, 12 contingent in the last 30 days for a 3.8 month absorption rate. Single families consist of 30 of the 46 homes. 5 went contingent in the last 30 days for a 6-month absorption rate. Now, here's where it gets interesting because it's inverted. The single family 0 to 700 is a 9-month absorption rate. The single family 950 plus is a 4.3. So it's a little inverted. However, just look at the numbers. 6 months for the entire single family market, 9 months under 700, 600 to 950. Only 2 went contingent in the last 30 days, 950 to, 950 plus, I have to say. Only 3 went contingent in the last 30 days. So again, Hopewell's a little tippy, meaning if I'm a seller, right, and things are selling at 700 and I list at 750, the probability of you selling is less than 1%, unless you have that super amazing, unique house, right? If the market's at 700, my advice would be, don't price it at 750, right? Bring us in, we'll do an analysis for you. Princeton, super interesting, right? 51 total, condos, townhouses, you name it, on the market. 11 went contingent in the last 30 days for a 4.6 month absorption rate. So here's where it gets really interesting. The single family home market, right, which again in Princeton is just kind of crazy expensive, 30 active, 5 contingent in the last 30 days for a 6-month absorption rate. So I'm a buyer. 6 months, wow. Princeton is shaping up. Maybe I can jump in. Fine. 0 to 999, 2 active, 2 pending, 1-month absorption rate, scorching seller's market. Why? It's affordable. It's affordable, right? And again, you go through the 9 things that matter for pricing in all of these towns, 9 in Princeton, 8 everywhere else. The single family market, 1 to 2 million, 10 active, 5 pending, 2-month absorption rate. Seller's market, that's 1 to 2 million. 3 to 4 million, I goofed it. I forgot the 2 to 3 million, but I can cover that next week. The single family 3 to 4 million market, 7 active, 0 contingent in the last 30 days. The single family $4 million market, 7 active, 0 contingent in the last 30 days. So again, that's a high absorption rate. So what does that mean? I can tell you, knowing the math for the town the way that I do, a lot of the houses in that price point are priced by ego, not math, and they're overpriced, right? The seller's, my house is special. It's not. There's 9 things that determine value. Your opinion is not one of them. So there's going to be some that reduce because they just started too high, right? There's going to be some that come on, price well, and they're going to sell in 2 days. Excuse me. So that's a quick snapshot of the market, town by town, price by price. So again, if you enjoyed this episode, if you found it interesting, please hit subscribe. Like I said, it helps the broadcast grow. And if you have somebody that you know is looking or buying or selling or investing, or if you want to talk real estate, you can always call or text us and let us know. Again, it's Josh Wilton. Thank you for tuning in to this week's episode of The Wilton Report.